Well, hello and welcome to this Money Control live stream. It's Thursday morning and you're watching a morning trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about all the earnings that came out post-market hours, including L&T and Dr. Reddy's. And we'll also be talking about Adani Enterprises that is looking to raise funds after aborting its FPO back in February. And we'll also be getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our live feed and we will have them addressed by our technical expert. But before we do all that, let's take a look at the top headlines at this hour. US CPI inflation comes in at a two-year low of 4.9% and below estimates of a 5% year-on-year rise in prices. Treasury yields slip while the Nasdaq rallies as investors buy into tech stocks. The street will now watch out for the producer price inflation print that will be coming out later today. Asian markets are trading largely lower, even as Chinese CPI inflation for April comes in at a two-year low of 0.1%. The SGX Nifty is indicating at a higher start for the Indian market. L&T's order inflows remain strong, but margin misses estimates. In fact, non-exec chairman A.M. Naik will be stepping down after nearly 6 decades at the group. Will hold the post of chairman emeritus, while current MD and CEO S.N. Subramanian is set to succeed him as chairman. Dr. Reddy's delivers an inline fourth quarter. Worries rise over the performance of the base business as US sales take a hit. A good set of numbers is expected from Asian Paints on a favorable base and easing input costs. Eicher Motors is also likely to report margin expansion along with healthy Royal Enfield volume growth in the fourth quarter. Exit polls for Karnataka hint at a photo finish between the Congress and the BJP, with neither party getting a majority. A Network 18 poll of polls sees the Congress winning 100 seats and the BJP winning 98, making JDS a kingmaker. Well, let's get straight to the top story and address L&T earnings that came in post-market hours yesterday. And for that, we are joined by Nirav Karkera, who's the head of research at Fisdom. Good morning, Nirav. Good to have you on the show. You know, L&T numbers have been slightly below expectations. In fact, it has met order inflow guidance, but it's the margins that have been, disappointing. And commentary from the management has now turned cautiously optimistic, vis-a-vis the optimistic tone that it had adopted back in Q3. What are your thoughts on the overall performance of L&T right now?
Yeah, so, good morning, Nandita. It's a pleasure being here. So first things first, there is a lot of focus on how the earnings, miss the estimates, but one needs to understand that overall it was a decent and satisfactory earnings. It was not just a miss on L&T's part, but, you could probably factor in some exuberance on the analyst part as well. So the business continues to remain fundamentally strong, structurally sound. The most important, vector that really dented the margins is the input cost. That is very evident. However, we expect it to be transitory. The outlook on commodities is that, most of the prices will continue to soften due to a variety of reasons. So, the next upcoming earnings cycle could look a little bit better in terms of margins as this dent moves out of picture, phases out of picture. At the same time, there was certain, one-time costs that have been attached to this entire conglomerate. For instance, on the tech side, on the IT and technology service side, the entire LTI Mindtree thing, the entire merger that happened, there were certain one-time expenses that, really took a hit on the margins. At the same time, elevated staff cost or employee cost also started eating into the margins. However, we expect this to be slightly one-time in nature, and most of the synergies of this entire merger is yet to be unlocked, yet ahead of us. So, from a hindsight standpoint, obviously it was slightly difficult in terms of margins for L&T, but going forward, I feel these very same reasons, will resolve and will contribute to a much healthier margin going ahead. On the infra side of life, the order book is really healthy. We are sitting at approximately 4 lakh odd crores worth of order book on the infra side. On the energy side, the international hydrocarbon business, international orders into the hydrocarbon business is faring really well. Some of the margin hit also happened on the realty side of L&T, wherein certain OCs were yet to be received, and that pressed really hard on the bottom line on the realty side of L&T's business. Overall, we believe the IT tech services business is yet to unlock synergies, and the value will be visible, going ahead in the times to come. Definitely, as you rightly said, the commentary had a cautiously optimistic note, but I believe that, cautiously optimistic makes it sound worse than it is. In general parlance, it is better known as prudent, statements that are made. I would say they are conservative, but yet pragmatic, practical, given the macroeconomic backdrop that we're sitting at, more so global macroeconomic backdrop. The commentary made a whole lot of sense, and in fact, it reinstates a whole lot of confidence in the management's ability to tide through the next couple of quarters with relative ease and improving margins gradually. So the focus is definitely going to be, and for all the right reasons, must also be on the execution of this huge order backlog that L&T has, and on the growth of its service segment, which is an up and coming segment. It's a sunrise segment for L&T specifically. A lot of focus must be given there, and a lot of focus on obviously the liquidity and working capital management, and the way capital is allocated is going to be critical, not just for L&T, but I feel capital goods as an entire segment. So yeah, pretty much good there.
Right.
Confidence instilling.
Right. Nirav, sales growth guidance of 12 to 15% and margin guidance of 9% pretty much achievable in FY24. What do you think? And also, I want to get in your thoughts on the leadership changes that have been announced. After 6 decades, AM Naik will be stepping down. It's the end of an era. There'll be a transition when it comes to leadership. Any impact, any challenges on that front? What do you expect?
Yeah, probably I'll pick the one on the leadership one first. That's an easier one because L&T, the organization has been known for great governance standards. It had succession planning. It has always presumed to be a very important, pointer on L&T's agenda. Although this event happened only now, it has been, in the coming for pretty some time. Also, it is not a complete exit. In fact, it is an elevation to the chairman status. So, there will continue to be some sort of association with the L&T group. There will be mentoring that happens. There will be advisory that happens as and when required. However, the next in line also is, has a very strong record in running the business and operations in a super efficient and effective way. I feel, in terms of leadership changes, there are more reasons to be excited than worried. Obviously, in the near term, till, the new chair has nothing to show in terms of change, there will be some amount of jitteriness, but I'm really confident that the new leadership will really execute effectively and efficiently on the agenda, and the continued advisory from the chairmanship will really ensure that L&T stays true to what it continues to promise and has been delivering upon since a long time. I feel that trajectory will continue, and I'm also hopeful that it could surprise on the upside going forward.
Well, we'll have to wait and watch if it surprises on the upside going forward. But, the stock has done fairly well, this calendar year. And at nearly 32x price to earnings trailing on a trailing basis, do you think it's expensive at the current juncture? And, the mood around capital goods sector is pretty upbeat. So which are the stocks that are looking extremely, attractive from this space right now?
Right. So a couple of things, L&T, as you said, the valuation is basically on the basis of, relative price to earnings basis. But if you, start looking at it from a growth angle as well, it may not seem as expensive as it is seeming to be right now. It is. Most of it is, most of the prospects are obviously priced in. However, I feel the capital goods sector itself is going to find itself at a very critical juncture where there are going to be a variety of, domestic tailwinds that will clash with a variety of international headwinds. And, there will be only a few winners in the entire sector. I feel, although the outlook on the entire sector is really upbeat, but I believe that the earnings is going to be concentrated in the P&Ls of a narrow clutch of operators in the segments, participants in the segment. L&T, given its valuation that it is right now, and also considering the growth prospects, in terms of the order book that it has, the order book that is underway, the developments of its less stated segments like in the hydrocarbon business, in the high-tech manufacturing business, in the nuclear business, in the financial services side of life, where it is expanding its retail base. I feel there are, just so many, developments that are still ahead of us, and these are some really heavyweight developments. This is basically value sitting to be unlocked, along with the entire, LTI Mindtree, IT synergies yet waiting to be unlocked. So I feel better days are far ahead of us. Good days are already accounted for. That is the reason that, prices may seem slightly steep. But I feel at this point in time, for a sector that has such, strong growth prospects, and for a company with such, standards as L&T, such quality and such governance as L&T, and the prospects that are very particular to L&T as a business. The good is already factored in, but better is yet to be penciled in. I would put it that way. So it still continues to be a very, strong opportunity in terms of an investment and in terms of a play on capital goods as a sector. Currently, there could be intermittent opportunities. There could be, certain events or news flows that could create opportunities to buy it for much cheaper. I feel investors must look at such opportunities much more closely because of its sensitivity to the international landscape. Also, there are certain headwinds that could open up opportunities for longer-term investors domestically. So investors should look at every dip and assess every dip from a standpoint as to ascertain whether it is the opportunity that they should start accumulating into. But the bias remains on the upside. The outlook remains optimistic.
All right, outlook on L&T is optimistic. Since you are here with us, Nirav, I want to get in a question on Adani Group of shares as well. Yesterday we had news flow coming in post-market hours that the company will be mulling fundraise, and this comes after it aborted its FPO in February, given the news flow around Hindenburg report, right? So do you think the dust has now settled and, the confidence is returning when it comes to these Adani Group stocks?
I would say it would be slightly premature to say that the dust has settled. There are still apprehensions. There are still many questions that go unanswered. But that is from the analyst side of the world. However, from the investor side of the world, Adani clearly seems to be, portraying a very strong roadmap ahead, and has been able to attract a lot of investor attention, at least lately. It is only a matter of time before such attention transforms into, conviction, and, the investors putting in the money where their conviction is. It is, probably on the cards. It is even high time that, Adani moves ahead from just mulling about a fundraise to actually, making things move over there. We are pretty confident that given the way the group is handling its business, the way it handled this entire debacle in the past, and the strength that it exhibits in its particular niches, there could be a higher probability of it, posting a fundraising success versus the probability of it failing to do so. Even for this one, there's a probability for it to surprise on the upside. We see, there's a feeler that there's a strong fundraising exercise underway, and, it could see a lot of success in the coming days. I believe at this point in time, it is more of a question of when more than if. It's not a question of if, it is how long are they going to take before they really, put this into motion. So it's a waiting game at this point in time more than anything else.
Right, a waiting game where Adani stocks are concerned. Well, with that, Nirav, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us.
Absolutely. Likewise. Thank you, Nandita.
Thanks a lot. Well, with that, let's also get on board our technical expert for today. Joining us is Thakkar of Sharekhan by BNP Paribas. Good morning, Jay. Good to have you on the show. First of all, share your thoughts on the Nifty and Nifty Bank for today, given the fact that yesterday it was a pretty range-bound session, even though we did manage to end above that 18,300 mark. Do you think today we are set to, make a dash at that 18,400 mark, given the fact that SGX is giving out positive signals?
Hi, very good morning to you, Nandita. See, as far as the indices are concerned, I would say that yes, the trade setup for today is positive. Reason being that we have seen Nifty closing above the levels of 18,300 ahead of the weekly expiry. Now, the Bank Nifty has been consolidating within a range of say 43,500 to 43,000, and that's almost a week. So what has happened, Nandita, is since past 1 week, if you see, then Bank Nifty has relatively underperformed the Nifty, wherein Nifty and Bank Nifty both in the last weekly expiry has shown a very clear run up on the upside, both of these indices, and had provided a breakout. What happened on Friday is we saw further momentum coming in all of these indices, but then finally we saw a reversal, and wherein we saw Bank Nifty in fact almost there was a kind of almost 1,000 points or so, and Nifty fell down almost 200 points. So Nifty on Monday managed to recover the entire loss, the entire loss which it has seen on Friday. And it's feeling about those highs, right? But Bank Nifty is not, I mean, Bank Nifty is still consolidating within the 43,500 to 43,000 levels. And if you have noticed that Bank Nifty is showing some negative divergence. So as far as the derivatives data and the technical data for the expiry for the day is concerned, I would say that Nifty data is definitely positive. The PCR is spinning around the levels of 1. Bank Nifty's PCR is trading around the levels of 0.86. So relatively, Nifty's PCR is better. And above the levels of 18,300, 350. The next target on the upside comes to 18,500. So the overall outlook for Nifty is definitely positive. Bank Nifty, I would say, is sideways. But the strategy to trade Bank Nifty should be buying above 43,500 for sure. Because above those levels, it would see a straight 500 points move, because that's the range within which it has been trading since past week or so. And derivative data also suggests the same, that above the levels of 43,500, the next highest call is at 44,000. So right. The strategy for Bank Nifty is clear on the long side, and Nifty is for sure.
Right. Let's straight away get down to some specific stocks. Then Dr. Reddy's reported its numbers post-market hours, largely inline set of numbers. US sales have taken a hit, but India business has been pretty strong. If you look at the stock, on a YTD basis, it's done fairly well, gained somewhere around 15% or thereabouts. But over the last 5 to 6 sessions, it has come under a fair bit of pressure. So do you expect this stock to now stage a comeback, given the fact that earnings have been pretty okay?
Yeah, see, I believe that overall stock should definitely see some reversal from the current levels, because the overall chart structure, if you see, Nandita, is positive for the short to medium term. I would say it has been forming a good reversal. It has formed a rounding bottom pattern. The indicators, especially the weekly indicators, if you watch out, have shown a really positive divergence as well. So the overall chart structure is positive. I think if there is anything that should be utilized as a bank also.
Right. Let's take up some viewer queries that are trickling in this morning. The first one is coming in from Raja Pasala. He wants to know your thoughts on IEX. He has entered the stock at 158 rupees and he wants to know whether he should be holding it for the long term or exiting it right now. The stock has been in an uptrend. Over the last 5 days, it has gained somewhere around 5% or thereabouts. Would you advise him to hold on to it now?
Can you come again on the stock, Nandita, please?
IEX.
IEX.
Yeah.
See, IEX overall has definitely shown a very good uptrend, I would say. The short covering led rally is what we saw, a very sharp move from the lower levels, although it has fallen quite a lot, I would say. But before that, we have seen a very sharp rally. And recently, the stock provided a breakout from a downward sloping channel. And since then, it's again forming higher tops. I believe that 158 now on an immediate basis in the short term will act as a very crucial support. With that as a stop loss, one can continue to remain long, and 158 should be a stop loss on a closing basis. And one can target almost the levels of 175 going forward.
Right. So those are the levels to watch out for on IEX. Hope that answers your query. The next query is coming in from Satyajit Rana, and he wants to know your thoughts on Atul Auto. Now, this stock has shed somewhere around 12% in a matter of a month. Would you advise investors to buy this one on dips?
Which stock? I'm sorry.
This is Atul Auto.
Atul Auto, okay.
Right.
See, overall, Atul Auto definitely has, as you rightly pointed out, has run up quite a lot. And recently we have seen some profit booking from the higher levels. I mean, the stock is trading around the levels of 359, 360. With the recent chart development or technicals development, I would say that the trend in the short term will remain negative, Nandita. I mean, around the levels of 390, there is a good amount of supply which can be seen going forward. So 390 is the resistance for Atul Auto, which is very clear. In fact, see, overall auto pack is doing quite well. We've seen the two-wheelers and four-wheelers, in fact, performing quite well. The auto index bounced back from 11,800 to 13,500, 600 plus. So auto has performed quite well, relatively outperformed the benchmark indices. But then as far as Atul Auto is concerned, 390 is a resistance in the short term because that has reversed since past 1 week or so. Until 390 levels are taken off, the trend will be down, can correct to the levels of maybe 320, 300 as well.
Right. Let's take up a query on one of the railway stocks then. This is a query on IRFC. It's coming in from Praetorian, and he wants to know whether it will go up today or not. So the stock has lost somewhere around 9% in the last 5 sessions, but yesterday, I think towards the end of the session, it did stage a comeback and end in the green. Do you expect it to continue the momentum in today's session as well?
See, railway stocks, I would say, have seen a very kind of a dream run recently, right? Nandita, I mean, all of these stocks, may it be IRFC, IRCON, RVNL, you name it, and they have done. So obviously, from the higher levels, we'll see some profit booking, but the overall trend, if you see, is positive. See, Nandita, as far as IRFC is concerned, or the other railway stocks are concerned, the previous rally prior to the correction was well backed by the increase in volumes. Thereafter, we saw some correction. In fact, that was a deeper correction in all of the stocks, in IRFC as well, when the stock plunged till the levels of 24. But the recovery since then, from 24 to 36 plus levels, that has been backed by higher volumes, increasing volumes, good delivery volumes as well. So this is a profit booking. The positional traders or the investors shouldn't panic. The traders, I would say, definitely for them, it would be a good amount of decent, or I would say rather good amount of cut. But then 29 is the level to watch out for going forward for the traders. 29 positional perspective, that's the reversal level for IFC. If that holds, it can be back about 26 plus levels.
Right. There were quite a few queries on these railway stocks. Hope that answers your queries this morning. Well, let's also take up a query on VST Industries then. This is coming in from Ajay, and he wants to know your thoughts on this counter. Yesterday, I think it saw quite a bit of a spike towards the end of the session. Would you advise investors to buy into it now that it's moving towards its 52-week highs?
See, VST Industries definitely, Nandita. I mean, this is one stock which has been consolidating since past, couple of quarters now, I would say. If you see, then, we had seen a sharp correction in this stock from 4,700 to almost, 2,600. So that was a sharp cut of almost 2,000 points. Then the stock recovered. I mean, this I'm talking about the, definitely during the COVID time. But then since then, the recovery has been very slow. The entire market has recovered, bounced back quite sharply. Nifty moves, Nifty and the other indices have given 2x plus returns. But VST has been consolidating. Now, this consolidation, Nandita, since so many years, have formed a good symmetrical triangle pattern. And with that, I would say that this is a stock for the long-term investors or someone having a long time frame. So definitely 2,800. That is the medium to long-term support for VST. And if those levels are held, and if we see going forward a breakout coming about the levels of 3,800, then I would say it would be a breakout of this 2,000 points consolidation finally happening after 3 years. So 2,800, I think someone who's holding since long, maybe again continue to hold. So the stop loss below 2,800, and if 3,800 gets taken off on the upside, the momentum traders can also get it because thereafter, you'll see 2,000 points value from there on.
Right, we just about have time for one more query on the show. This one is coming in from Satish Kumar, and he wants to know your thoughts on Gujarat gas. I think the numbers also came out yesterday. The stock has been in a downtrend. In fact, around that 463 mark now. Would you expect more downside on this one, and how should one approach this stock now?
See, overall trend has been quite positive for Gujarat gas, I would say, Nandita. I mean, obviously, since past couple of days, we have seen some profit booking and sharp one, I would say, from the high levels. But then the overall trend for Gujarat gas is positive. For the short-term traders, I would say, the final support should be at 697. If 697 levels are held, there can be a good bounce back. At the upper end of the range, which is almost 800 plus levels. But if 697 breaks, definitely then thereafter we should reset, because thereafter it will confirm that the trend in the short to medium term has reversed from up to down.
Right. Well, that's the call on Gujarat Gas. With that, we are timed out on this show. But before I let you go, Jay, leave us with some of your stock recommendations for our viewers this morning.
Definitely, Nandita. And I would also like to add the disclaimer along with the same, that the stocks which I mentioned might have been recommended to the clients, and they might be having positions, but I do not have it. The first buy recommendation is on Metropolis. Now, see, this stock has fallen into a 5-way declining structure, and thereafter we have seen since last couple of trading sessions a good amount of short covering happening, a rounding bottom pattern that's been formed, a clear buy crossover in its daily as well as weekly momentum indicators with a positive divergence, and from the derivatives data as well, we have seen good short covering thereafter initially, and thereafter now we have seen some long build happening as well. So Metropolis, the stock is trading around 1355. From there on, you can see the levels almost 1450 to 1500, and one can place a stop loss below 1300. So, here the risk reward is 1:2, 1:3. The second buy recommendation is on Laurus Labs, trading at around 332. It has got a similar chart structure as that of Metropolis. So needless to mention much about technicals and derivatives about that. But as far as the levels are concerned, the target on the upside comes to 355, 370. These are the two targets going forward positionally. On the lower side, one can place a stop loss at 315. The final buy recommendation, Nandita, would be on Jubilant Pharmova. And this stock too has provided a very nice record. In fact, in yesterday's session, it has shown a very good run up, and since past 2 days, the stock has been going up, ranking higher with an increase in volumes. And it has formed a good inverse and shoulders pattern as well on the lower end. So Jubilant Pharmova can be bought at the current levels around 342. One can place the stop loss below 320 and target 380 to 400.
All right, Metropolis, Laurus Labs and Jubilant Pharmova. These are the three stock picks from Jay for this morning. Well, with that, thanks a lot for taking out time and joining us this morning, Jay. And we are completely timed out on this edition of Morning Trade. But don't go anywhere, because coming up next is Opening Bell.